Good morning everyone. Welcome to the Wavy Tunnel PRO Market Outlook, 14th of April 2026. Before we start, if you please read the disclaimer and understand that this presentation is for educational purposes only. If you just complete that, and then we can crack on with what is going to happen today. The last couple of days have been good lessons in price action dominating markets and not what potentially could happen in global disputes, and technical drivers and factors are the dominant elements at this time, which then plays into what Wavy Tunnel provides. So let's have a look and see what we have in store from an economic perspective this morning. We have ADP out at 7:15, PPI, and then some Fed speak. I don't think that's going to be a factor. 3:30 API, crude oil stock change, that will be important. But it looks like, we have a stalemate and tactics that are being employed now to try and force negotiations and get things moving forward in a more positive manner. So let's hope that that comes to fruition. Earnings, as we saw yesterday, with Goldman coming out first. We've got JP Morgan, Citigroup today. You also got BlackRock and Wells Fargo. So keep an eye on that. Goldman Sachs, if you look at their trading results, blew it out of the water. So quite remarkable, really. So let's go into the markets and let's go and have a look and see what the state of play is. Start with the euro and blank chart just to see what we were looking at on Monday. I'm just going to extend that. And just delete that. Let's get rid of all of these and let's start again. So what have we seen? As we said, conflict on, dollar positive, conflict off, dollar negative, and we've seen that now in the euro, and you can see that where it's now stretching in. We've got our lines sort of mapped out here on what we're going to do, and then we go and have a look and see where Wavy Tunnel comes into all of this. And there we go. We have everything that's looking positive. Sentiment is positive. Trading over the last day and a half just shows you that you've got to look at the technical picture, and you must turn off the noise that is created by all the conflicts, potential conflicts, as serious as it is, because this is what dominates market. This is price action. This is orders in action. So, and this is indicating to us that the market believes that things are back to normal. The normal trends can resume. Markets can go back to what was happening 2 months ago. Dollar weakness. Stock market's positive, but I wouldn't get too excited just yet. But at the moment, we have sentiment that is driving this, and I wouldn't be surprised now if we extend a little bit further into 118.5 to 119.5. That's what it looks like to me, because you can see the wave is going to try and cross back above the tunnel. The bungees are starting to move, and we have our first move up. So let's break this down a little bit further. You can see that on the 4-hour breakout 1, fill the gap trade, not fill the gap trade, I beg your pardon, first pullback. Let's get rid of that. And then this then was the rally that ensued. So let's have a look and see if we can narrow this down. So targets were met on the first move, and this is extending. So now what I would do is look to the left and go and see where the market could be targeting. So initially 118.36. We are starting to get pulled away from our comfort zone, our support structure, the wave and the tunnel. We're moving away from the moving averages, we're moving away from the trend lines, and this is just a release. It's like when you just breathe a sigh of relief and the market explodes. So I would look for levels above 118 for possible shorts and retracements. Let's go and have a look and see what that looks like in the 1 hour to see if we can find something. Again, also stretched away, also moving away, also looking for some direction, pulled away from this nice strong trend upwards. Nice trade to get. All the moves back into the wave were successful. If you got those setups, this was the gap that we had overnight when Sunday when the markets opened, and all bets were off, and we had this gap here. So we can see now that that gap was broken. And again, the same applies for, you know, when we box these consolidation areas, you can find trades in them. They're breakouts. So you don't necessarily get the first breakout, but you get the relook. And so you get this kind of scenario playing out, and this looks like it's a little bit stretched for me. It looks like it's, you know, but sentiment is a funny thing. I wouldn't be surprised if we repaint this upper oil and before we start seeing a pullback into this gap down here. And let's have a look and see what that coincides with on our Fibonacci tool, which will be great. Again, all the levels that we love. You can see that there's areas of support at each and every level here. So above 118, I think there's a chance that you can look for sells, and then you can set profit targets down in the 117 and a half to a quarter area. That would be a nice trade, and then you could look for possible reversals and to see if that was to go up again. To set specific, you know, to trade on 1 minute time frames at the moment is great, but you have to have your chart all set up on the longer term with identifying the numbers. Why I'm specific about numbers is, like Jody, when you worked in the bank and you're talking to people, you're talking about where pockets of support and resistance, and where people are placing orders. And this is why you talk about a number, and you get very specific about numbers, because this is what, you know, all the conversations that have been had, and these are then sort of put into what, well, they were put into me and Jody before, but now they're put into a machine, and an algo does it. So they still have these levels. They've got then their machines that will drip feed if the order's too big into the market, or they will put, and that's why you want a number, because you want to know what people have identified as what the dominant support and resistance areas are. So we can see initially, so this is the key area now for me. On the euro, here it is, 17 3/4. So our immediate range is going to be 17.75 to 18. And you can, if we break below 17.75, we're going to come and have a look at the lower end of this. This would support all the additional indicators that we have here. There also an oscillator, the bungees. And I would have thought that if we break back above 18, that's why I'm a little bit of a seller as well. I think that we're going to have divergence. We're going to be stretched, and so on the higher time frames, not necessarily the 1 minute time frame. And so that's what I would be looking at in the euro. Let's go to sterling. Daily. So all out fibs were there, all our levels were there, everything's still intact. So let's see how that's playing out with Wavy Tunnel. So as we have in the euro, we have this, the wave and the tunnel, it's mapping out exactly the same. I would have thought moves into 136 are good levels for sell setups, and then targeting areas back into the wave and the tunnel. If we go down to the 4 hour, that will become a little bit more clear. And we can see that on the 4 hour, we've really pulled away from the wave and the tunnel. Again, market will become uncomfortable when it's stretched away to this extent. So initially, you would look for a pullback into this 134.14 area. Then you've got bigger support around 133.65. And there's where you could be looking at. I would still be a seller, because I think once the euphoria of, let's say, this peace, and we've unshackled and people have got rid of the hedges to the downside in equities, and the hedges against the dollar, normal economic figures and normal market practices will resume. And then what that will be then focusing on inflation and the impact that the energy prices have had on markets. And that is going to where interest rates come into play. And that's where we probably see that the emphasis from shifting from lower interest rates might have to shift to a higher interest rate regime. And so I would be very, very careful once this euphoria has settled down, because the impact and the aftermath of this has not been felt by the economies at the moment. So sterling, again, close to 136. I think look for levels to sell. You can look for pullbacks into the 134 3/4, 135 for possible buys and continuation. I think at this point in time, I think it's a frivolous exercise to pinpoint specific areas, and that's why my analysis is very broad. Identify the level, the key levels, then apply the Wavy Tunnel method into all your analysis that you've done and your levels. You know what to do with breakouts, the pullback trades, looking at the bungees and the awesome oscillator for divergences, etc. And so continue along in that vein. So we can see again, big stretch away. So I would expect that sterling, if we blow out top here, I would be looking for a blowout top above this level and a pullback into 134.72. So that's what I would be looking for on sterling. Let's go to the Canadian dollar. Let's go to the daily, have a quick look. I always like to just go and have a look and see how previous analysis has been tapering out, and we can see that this box that we had here played out, and we had a breakout. We can see that this is now playing out into a possible deeper correction and pull back into this 136. So the Canadian dollar is not following through in a similar vein as to the others. Not as pronounced, and so it looks like decision points will be around this 137.25. So that looks like that's no man's land, that's halfway. So 37.25 is an area we're going to be looking at to see if there's possible trades. Let's put the Wavy Tunnel on and see how that all plays out with our indicator. So we can see our area of resistance. So pull back into the wave and the tunnel, into this 138.25 area. So I would look at that as a possible area of resistance. I would expect that we would have a deeper pullback in the Canadian dollar down into this zone here. So that's another number we need to make, around 137. So 137, 138 and a half is the broad range. Let's go down to the hour, see if that tidies it up about 137, 138. We can see on the hourly chart, we are probably going to pull back into, so we possibly get a fill the gap trade. I would look at these levels in the Canadian dollar. So anything above 138 to 138.25, you can look for possible setups, I beg your pardon, for a move lower again. Dollar yen, you know what I'm going to say. I'm talking about 160. Still in play, nothing to say here. Market's watching it, the whole world's watching it to see how this plays out. You can just see that this is shaping up into, it's going to break out soon because it's just in this zone. So you mark that on your chart, and there's not a lot to do until you break out of that. You can see it on the 4 hour, it's the same. Bunches in no man's land, and so we are, you can see how this is flattening out. This is all converging on a point, so something's got to give, something's got to go. So what that is, not sure, we will wait and see. Let's have a look at, started looking at the Mexican peso as our emerging market currency. Let's see how that's playing out. Nice and choppy, nice and volatile. Let's go to the 4 hour. That might give us a little bit of a, just trying to get context here. So this looks like it's again pulling away. I would look for pullbacks in the peso. Again, you just always look to the left. You're looking for those areas and looking for a number in that area. So we can see that 1760 to 1770 is an area of interest for us that we might be looking for a sell setup. It'll be a correction in this, and the market will tell us what to do. And there it coincides with 50% correction, so 1770. So first, fill the gap trade. Let's have a look and see how that behaves. You've got a strong 45-degree angle in this. So the market is probably initially going to look for sell opportunities into this. And if we do extend, then you just use the tunnel as your barometer. Let's have a quick look at Euro Yen. You can see how that's pulled away and moving away again. The yen is the one that's holding this back, and once the yen makes a move, then we will probably see a pullback into the wave and a possible fill the gap trade. I can see that on this, all targets we stretched away, so you can see that we've stretched away, and this market is needing to correct. When it does, we do not know, and this is why you've got a structure here that will help you, guide you, and try and keep you on the right side of the trade. But overall, I would be looking for a pullback into this area here. So make a note of that number. Anything above here, you can see that it's running out of steam. It's starting to struggle. It needs some form of direction. It needs to know, right, what are we going to do? It doesn't really want to make a new high. It doesn't really want to come lower. This was another good example of how when you've got the wave at a 45-degree angle, bang, bang, bang. It just keeps you on the right side. It's like a bigger trend line. And you've got, you know, this whole wave that is supporting you. And you know now that if you get a fill the gap trade now you've got a decision to make around 185, let's call it 186, for either that is sufficient correction and we continue higher, or we want a deeper correction and we have a fill the gap trade on a higher time frame. And that's how you do in your analysis. So I will look at futures now on the Ninja platform. I just got to find my chart. There it is. So now we can see the strong moves in the Nasdaq. Very, very strong. But we've pulled away. So let's go and have a look at the daily. And we are coming into previous areas of resistance up here. 25,700. So I've got orders stacked above 700 to sell. But that's just me. It's not trading advice. It's just what I observe and the way that I'm looking at this market at the moment. And just to see, so above 700, I think it will struggle. We need to pull back a little bit. When you see me draw these horizontal lines, I'm just looking for it, and it's remarkable how it coincides on the left-hand side with breakout. So that was a breakout over there. Here it came back into support. And this is why I keep re-emphasizing, look to the left on a chart. Another great example of the 45-degree angle of the wave. We could not even come into closer to the tunnel. It's always the last one, and I'll tell you why. And if those that are studying Elliott wave, and if you look at wave analysis, and once you've had a fifth wave, and this is where the bigger one comes, but the market will always want to go back and look to see if that really is the top, and you can see how they failed. And then we had that very tight range that we were in for a couple of months before the drama in the Middle East then brought this market down. I am still surprised, and I think anybody would be surprised, that the market capitulation, is that a capitulation? No, it's just a correction. Shows you how this market is so well on top of all their risk management at the moment and knowing what to do. So let's have a look and see if we can break this down a little bit further. So again, we are stretched. Where's the wave? Where's the tunnel? It's back here. It's back here. And we don't want to be pulled away too far. You can see here. See, when we pulled away and we stretched away from it, we meander back to it, and we're going to meander back to it as well. But so watch 700 and then watch 25. So that's very broad. So let's narrow it down a little bit more. Messy chart. Look at all the gaps in this chart. They've all been filled, but it's a messy chart. And this is all the are we, aren't we kinds of messages that are coming out in the market. And this is why you've got to be so careful in the marketplace. And it's like this morning. So that was what we experienced from the opening on Sunday or Monday. We had this gap. Another good example. So there's your gap. What happened when we got out of the gap? Was that enough? Was the market happy now? And was the market going to continue going lower? No, it wasn't. You could see Look at the price action in here. Look at all the wicks. No closes inside of that box. The closes were all outside, and so it was off to the races. So your entry level would have been there. 25,353, breakout trade, bang, and off you go. And then you see how we get stretched away, too far away. Then we spend a couple of hours just correcting all that. Market still got more to buy. Market still got more to buy. People undoing hedges. So market has been grinding higher. So it's going to need to talk to us. So broadly, those levels I've given you, I would hold those levels for now. About above 700, and I would probably say with 25 400, 25 700. S&P daily, the song is going to be the same. You can see now, look where the all-time highs are in S&P and look where we are. It's incredible, isn't it, with what's going on in the world? But this is where, we're not there to, and this is where markets, it's all about hedging, it's all about flow, it's all about what money's doing. And this is why they say, the stock market's not the economy. And that's what gets a lot of people sometimes. It certainly got me, before you go, well, this is all looking like it's going to, it's not going to perform, and you sell it, but it just continues going higher because the dynamic is different. So we've stretched away, we've pulled away, we need to come back. So 68.60 is a pivot point. I think around, there'll be a lot of call selling around that 70 area. There'll be a lot of call selling. I won't talk too much about options in here, but anybody that trades S&P or equities, you need to observe and see what's going on with option flows, because those dominate the market at the moment. Again, not a lovely chart, but you can see again the breakout zones. You can see where, and this is why you spend time in your charts. You tidy it all up, you look at the gaps, and you look to then trade. And so what would have happened here? So you had this big gap. You had the tunnel that was there, which would have been your first decision point. You had this big move up here from there to there. And then, so that would have represented, these levels on Fibonacci. You can see we've achieved our target and we're stumbling around this above 69.5. I don't think it will extend into anything. I don't think we get too close to 70. But again, that's not advice. It's just how I feel and what I observe in option structure. So a pullback. So let's call it 68.80 support. 69.75 to 70 will be strong resistance. And then look for your setups in the lower time frames. You can see how we're now just meandering around. This market doesn't want to go. Look at that. It just gives you an example of how patient you've got to be sometimes, because it's doing nothing. But this is where, if you've got a number and you've got an alert, when that number hits the alert, and then off you go. You just go and look at the trading this morning, and you can see that it's just been grinding higher. You've had, again, you see the stretch away. It wants to come back to the comfort of the tunnel. What have we got? We've got more buyers. We keep going. We came back into the tunnel flatlined, and once you got the tunnel flatlined, you draw your box, and then normal services. Now we've got a flip, and so you can see that this morning we struggled to get above 69.5, and you've now got in. So you have your breakout, you have your fill the gap trade. Now you've got a decision to make when you've got a fill the gap trade. Are we going to then continue, or you can see how the tunnel has rolled over and you're going to now do this in reverse. So sell the pullbacks into here. So we at a decision point now. And so you have to make your mind up what happens here. So you watch that. So if we start closing back above 60, 69.40, we're obviously going to go and retest the highs. If we maintain closes below 69.36, then we're going to come back down into this area down here at 69.25. And then you look for, you can see here what you got. Divergence, divergence, continuous divergence. What have you got here? You've got wicks. That's demand. So again, you look to the left. What have we got? Let's have a look. So this is where the support came in here. Look at that. So you can see, again, an area. So that's it. So there's your area again. And then you're using the wavy tunnel framework to help guide you, protect you, and then you got all the tools and the trade setup guidelines from the education, and off you go. And now we'll see what happens in this. I hope that's helped you all today. I will give you another update tomorrow, and I think Jodie's going to send out emails about our discussion and feedback sessions and question and answers, etc., which will be held, I think, next week. I stand corrected, but I think that's what's going to happen. So happy hunting. Observe your risk management policies. Do your work in your charts. Identify the areas. Look for possible trades. Trade small. Stay safe. Speak to you later.